Fantastic. Thank you, all of you, for joining me on this BigONE discussion around, well, I guess it's a bit of a bear market, or is it? I mean, that's what we're here to discuss. And if we are in such a difficult market, then how do you deal with it? What's the advice from you guys? So anyway, before we get into the fun of the discussion, maybe I know you need to be one. Maybe you could each quickly just introduce yourselves. Whoever would like to kick off, please go ahead.
Okay, well, I can start. My name is Michele. I'm based in Italy, and I work with a small UK investment fund. Currently, we are developing two installation of mining. We are currently based in Russia, and we are developing a trading system, a semi-automatic trading system by a private individual. I'm carrying out private consultations and advisory for early stages startups in the crypto space.
Yeah, I can go next. I'm Ben Appleby from the UK. I'm the founder and CEO of The Cake. The Cake is an on-demand live chat service that provides consumers and businesses with the best crypto and blockchain knowledge and advice from our pool of trusted experts delivered by our custom chat app.
Hi, and I am Brian. I am an attorney based in Trinidad and Tobago. I'm currently in Kenya. And I'm also admitted to the English bar, but currently not practicing the UK. And I'm an advisor with The Cake as well. So I work closely with Ben Appleby. So it's a great pleasure to meet all of you. And I'm a PhD candidate as well at the University of Nottingham, starting October 2022 on the ethics and regulation of blockchain.
Hi, I'm David, CEO of Vintage Entrepreneur, financial broker, and author of a crypto book called Crypto Made Simple.
Oh, thank you, all of you. That's a nice introduction. I've already introduced BigONE. I'm Stuart, as hopefully some of you folks watching this know. I do PR and content for the exchange. I've been involved in the space since maybe 2017 now, so that makes me a little bit of a veteran, but I'm always interested to hear and learn new things. And I guess right now, what we want to know about is, are we in a bear market or somewhere in between a bull and a bear, bearing in mind it's such a fantastic year last year, 2021, but this is 2022. So are we in a bear market? What do people think? Ben, maybe you want to give me your shot on this one to start off with.
It's a really great question. And do I know the answer to it? I'm not sure that I do. Looking at the charts, the price action at the moment is pretty much the same as it was this time last year. It's gone up, it's gone down, it's gone up, and it's gone down. So I don't think we're necessarily in a bear market. The time horizons that I look at, I wouldn't call it a bear market. If it continues to drop over the next week or 2 weeks, I might change my stance on that. But currently, I'd say we're kind of in a accumulation phase. There's a bit of kind of FUD going around. I think new hands are kind of probably quite nervous. I'm not nervous because I look at a bigger picture. So I'm not sure we're in a bear market at the moment.
Just to support what Ben is saying, I think people are really looking at the figures in terms of the numbers. But if you're looking, if you change perspective and look at the developments in crypto, if you look at El Salvador and the current uptake of crypto in so many institutions as well, the price is not the only determining factor. And there was such a rapid growth last year, and now maybe things are a bit slow, but it doesn't quite mean we're in a full bear market. So today we are probably 37,000 Bitcoin, which isn't so bad. So I would say let's just be patient and look at the numbers from a very economic point of view. You know, there's demand, supply, and people need to just relax and let the market play itself out.
In my opinion, we are not actually in a bear market. We are still above the previous minimum that goes back to, I'm looking at a weekly chart, so I'm talking about the half of July of the last year, and we are still above that minimum. So the parabolic trend is still confirmed until we are not breaking down heavily with volumes and with the candle body, the 30K level. I think that all this movement that has been carried out since 69K to now actually was just a washout, a sort of newbie squeeze. We usually talk about short squeeze and long squeeze. We are just now talking about newbie squeeze. So for me, for example, that I'm inside the crypto market from 2017, I've been already passed through the beginning 18 crash. So like Ben said, I'm here and smiling because the more the price go down, the more I can buy at cheaper price. So I'm totally not worried about it.
Exactly.
I kind of agree with that, because I actually think it's a bit of a compliment to talk about crypto being in a bear market. It's not a bear market, it's a crypto market. And like Ben said, it's really quite the same as what we've all been used to, but now because crypto is becoming so mainstream, it's being given terms of the traditional markets. So we're in a bear market as far as everybody else is concerned because of what's going on in traditional markets. But it's a crypto market. It means it has price fluctuations and it gives opportunity. And anybody that was feeling that they'd missed out when Bitcoin was at 60 should be piling in now when Bitcoin's now, I think, is at 38, 40.
Yeah.
Opportunity market now.
Okay. And James, sorry you've had a bit of problem with your video. Could you give us a quick intro and also give us your take on, are we in a bear market? What do you reckon, James?
Yeah, so my name's James Rennie. I do blockchain consulting and been in the crypto space since 2017. Done various roles with different crypto communities. And now I try to help people with the more technical side of things. I would say that we may or may not be in a bear market, but I don't think that it really matters. And the reason I don't think it really matters is that when you're looking at a portfolio, you have to make decisions based on what you can handle ahead of time. So when these major crashes are happening to me, I spent a ton of time like studying different techniques to deal with the market and stuff like that, as well as a ton of research on anything that I own, which means that I have high conviction and I have high planning. So when I go to actually see the market crash, I've already made the decision ahead of time. So the decision doesn't come emotionally. It's like, if X happens, so if market crashes, then I execute this strategy. And market goes down is not like a symptom that is something that we cannot expect, right? It's pretty sensical to say the price of asset can go up and the price of the asset can go down. And, different protocols can have different issues that happen with them. So being aware of the protocols that you're dealing with, what could go wrong, what could go right, how can that affect the short-term view of investors, and what you're going to do about it when those things happen, puts you way, way ahead of the average person.
Got it. Okay. Now, I know, Ben, the cake gives a lot of great advice that's core to your service. I mean, obviously, James is talking in one way about a very kind of a sophisticated approach. What about people who are just like new to crypto in 2021? What can they do to either stem their losses or take advantage of this current market? What's your advice?
Yeah, I think obviously James is an experienced kind of trader. He's been in that space for a long time, and there's a lot of sort of technicals that, if you're going to try and trade as a noob, the high chances are that you're not going to come out very well. So you do need a plan, absolutely, to James's point. at a very basic level, you should be kind of sticking to the fundamentals and not being led by your emotions. And I think probably the bigger one is not being led by the media, because there is so much FUD out there. You know, we've got a whole world of traditional media that still dislikes crypto. So they're so quick to jump on that bandwagon and, you know, hail the death of Bitcoin yet again. And, you know, noobs are going to see that and they're going to react. And so the first bit of advice is to not react. The best thing sometimes is just to do nothing. You know, HODL, hold on for dear life, has done well since the inception, and it still holds true now. So when you're getting into crypto for the first time, you want to be looking at the fundamentals. You want to be looking at the long-term projects, your Bitcoins, your Ethereums, the ones that have a lot of developer support, the ones that have got a lot of community support. Where you want to be most careful is the projects that may not have high integrity. So your kind of exotic kind of projects that might have been a clone from another project that's been very easy to kind of set up. If you look at the team and they're still committed to the project, they've got a good vision and good fundamentals, they're not going to go anywhere just because there's a bit of a bear market. And probably the team that are running that have gone through bear markets as well. So, you know, look at it as an opportunity. A good thing to kind of do is to have some stable coins in your exchange account. So, you know, as the crypto kind of drops down, you've got a bit of protection there because you've got stable coins, they're pegged, you know, to the dollar or whatever kind of sovereign currency you're choosing to use. And then all those kind of projects that you've been looking at thinking, oh, that looked really good, they're on sale, guys. You know, use it as an opportunity. And if it's got good fundamentals and a good team, the chances are that when things pick up, you know, that's going to go up as well. So keep your eye on those projects that you've invested in. Look at them, look at the price action. And if it's going down, you've got some stable coins on exchange, it's on sale, you know, use it to your advantage, but spread your risk as well. Don't just chuck all your eggs into one basket. You know, to James's point, have a plan, distribute it across a few projects, and, you know, you're de-risking every time. So yeah, that's my advice to a noob, I think.
Okay.
Yeah. I would say the key thing in any project and in any sort of investment is do your own research, because there's so much information out there. And even for players and thought leaders in the crypto and blockchain industry, there's so much talk, like on LinkedIn and all these platforms, Twitter, there's too much commentary going on. You just need to have a very, you need to be very aware and see what's going on. And you need to see, look at your pockets. What are you willing to invest? What are you willing to lose? What in your portfolio, what are you willing to diversify as well? And crypto is here to stay. And when you have big institutions like the IMF telling El Salvador, for example, to stop using Bitcoin as legal tender, there is more to it than, in law we say, there's more to it than what we are seeing at prima facie. So just do your own research and see where this is taking you. So just like with traditional finance, this is crypto finance. So think of it in such a way and look for people who are well educated, very knowledgeable, and who will point you in the right direction instead of just panicking and moving according to what the media tells you. Because even most of these reporters who write these articles are not experts on these topics, and they're also sensational writers as well. So just follow the right crowd, the right community, and the right thought leaders on the right platforms.
Okay.
Yeah.
I totally agree with what Brian has just said, because journalists are not divulgators anymore. Their task number one is not just share information, is to clickbait, to attract attention. So that's why they try to amplify whatever is the sentiment of the market, will amplify it, increasing the FUD that correctly Ben anticipated before. So people should just do their own researches. And I was just looking now, that Amazon was founded into 1995. So they passed through the bear market, the so-called bear market of 2000, 2008, and also this bear market of the 2020. So I think that if they could survive and they even could amplify their business, I cannot see why cryptocurrencies cannot.
I think if the question's about newbies, firstly, I'll just say welcome to the crypto market. This is what happens. Like you've had one end of it, which is where it's always rising, and it's really easy. Now you've got the other end where you've seen what people talk about these price movements. But stay faithful to it. If you've already bought in, don't panic. Stay faithful to it. Crypto is here to stay, and it's building. And now is the time to take stock and just look more carefully at where you've invested or where you might want to invest. I think Ben, Brian mentioned it. You've got to just research things. Be careful what you're reading and research what it is that you might want to get into. But there might be a few coins out there with really good ideas behind them, good projects with people who have been in the market for a long time. Could be a good time to invest. Just do some quiet research.
Yeah, good advice. Now, I was going to ask about minimizing losses at this point, but I think that's a big negative. I think from what you guys are saying, there are opportunities in this market. If you do the hard work. I'm sure people listening to this, watching this, want to, get a leg up, bit of a, shortcut. So give us, your ideas where people should be looking. Is it NFTs or is it something more specific? I know there's a new rival to OpenSea come out, for example. I mean, where are the opportunities despite, the current downturn? What do you reckon?
Can I throw in two things that I think that people make as common mistakes?
Sure.
So one thing that I'm seeing a lot is when the market's going up, people will kind of pile into these most exotic possible asset, especially when they're new, because they feel like they've missed the opportunity and that they need to get that 1000% gain.
Sure.
If they don't get that, then they're not going to get anything. It's not going to be good for them. And I think that what we just saw in the last couple of weeks is really good. This is a really good opportunity for those people to learn that, take this as a good lesson, that those are what gets the most pain when this happens. The other thing being that I see a lot of people following charts, price predictions, all these kind of things of individuals in the space without context. So they don't understand time horizon. They don't understand the risk management and stuff of that portfolio. Like, these are not people managing their funds. These are people just making comments about how they manage their own funds, and mostly and often making those comments towards other people in a dialogue where the other people can actually understand. They could reproduce this data themselves. And I find that a lot of new people, they get mixed up in that communication, that conversation. They can't replicate the chart themselves. So, what was said last week has become not true, and they can't even verify it. They can't actually check that. And now they've gotten themselves in a position where they're trying to do these trades. And I think it's best to just stay away from that.
Okay.
Yeah, sitting tight is a good strategy sometimes. What's that quote about traders that do nothing actually end up making more than traders that do things? There's a quote about that somewhere. I think another kind of like red flag that I come across quite often is if there are kind of groups that you're part of, whether it's, your WhatsApp groups or your Telegram groups, if there's a lot of talk about, quick get out, quick get in, that for me is a red flag. You know, those kind of groups are kind of, you know, led by, you know, a select few, and human beings are kind of programmed to react to fear more than they are to, you know, good things, right? And it's very difficult to kind of sit there and watch this thing. You know, if you're out on the streets and you see people running without any context at all, you're going to start running because you're going to go with the tribe, right? You're going to go with the group. And that's just the same in crypto. So if you kind of hear that, you know, call it out. Why are you running? Just ask the conversation. If there's no real good reason behind it, you can kind of call this out and kind of, you know, get a good perspective about what type of group that is. And, you know, just have a look at the fundamentals, zoom out a little bit. And yeah, just be really cautious of those kind of groups, you know, spread yourself across, you know, credible groups, reach out to people that have got good network effect, got good credentials, you know, check them out on kind of LinkedIn and places like that. And you'll start to kind of realize whether these are kind of, you know, your more kind of mature, astute kind of investors with, you know, a good experience behind their belt, or whether it's, you know, people that have only been in, you know, for 6 months or a year, and they're probably not that experienced a voice to be listening to.
One thing I would say for those who do have a risk appetite, and there is an opportunity in a we're going to call it a bear market, and that is shorting a coin. I mean, I don't know what level of knowledge people have with regards to trading, but just briefly, when you're shorting a coin, you personally expect the price of a coin to go down. So if at the moment we keep the numbers simple, we pretend that Bitcoin's at 40,000, and you believe it's going to go down to, let's say, 35, then what you will do, you will borrow a Bitcoin from a trader, a broker, and then you will immediately sell that coin, and you'll have $40,000 in your cash account, trading cash account. Then you wait for what you expect to happen, which is Bitcoin goes down to 35,000, and you'll use your cash to buy at Bitcoin for 35, leaving you with 5,000 in your cash account, which means you've made 5,000. So if that's your call, you think that there's more to happen than what's go down, then it's quite good fun shorting a coin. And obviously you don't have to short a whole Bitcoin. You can short a small part of a Bitcoin. You just have to be aware that if you do short and it goes up, so your 40,000 Bitcoin goes to 45, then you've only got 40,000 in your cash account. You're going to now find 5,000 because you owe that trader that Bitcoin. The trader might call you in at some stage. I want my Bitcoin back, please. And you're going to have to buy it at whatever the price is at that. But it's for those that have an appetite for risk. And I know there's people out there. Most people that are in crypto actually have an appetite for risk. That's why they're in crypto. So it's worth looking at that. But obviously, never gamble anything. I'll never trade anything that you can't actually afford to lose.
I think that some Telegram groups and other aggregate groups of new traders, I would say, are a good opposite indicator of what the market is going to be. So when you see a lot of FOMO, a lot of people that are running into the market, that is the best moment, I think, to go out. Big investors use the FOMO from retail investors and small mid investors to create those fake breakouts, to create a liquidity, I would say, a mass big enough of volumes to create the order in the other way around. So the fake breakouts are the best pattern for big institutional investors to make the market turn around. And that's why I'm saying that, in my opinion, we are not still in a bear market, because some big one was just willing to accumulate more. Some big investor was just willing to accumulate and average down the buying price for Bitcoin, for example, or other altcoins. So I think that at first we should just stay away from the Telegram groups that are just a mass of not knowing people. And then people that are willing to invest their money, they should know by themselves what they are going to do. The worst feeling that I had until now into trading was the regret of following some indications from other trader that had completely missed the trend of the market. So in that moment, I decided I was the only one responsible for my own money. And that's why that was the moment when I started going deep into the technical analysis, but not just the technical analysis. You can find free on YouTube. I mean,
yeah, I think there's another
Sorry.
kind of like really basic strategy that kind of most people can follow, even the noobs can follow, right? So you buy into a good project, whether it's Bitcoin or Ethereum, and it goes up over time. Okay, that's the good side of it. What you need to be doing when it's going up is something that most people don't do. They're just going to sit there and watch it up, take profits. Okay, so when it goes up, trade some of that profit across to a stable coin, siphon a little bit off the top. And then when it goes down, that stable coin is going to hold its value more than some crypto will. You've then got that profit that you've made. That's pure profit. You can then, to David's point, with some of those more exotic kind of plays, you can start putting small slices, because those small slices of value that you put in, some of these altcoins can go up thousands and thousands of percent. So you're taking off a small risk on profit you've already taken, and then you can trade into some of these more exotic coins. If it goes to zero and you lose it, then really you've used that with the profit you've already made, but the upside potential is huge. So you've got to kind of understand where the risk is and prepare for that bear market in a bull market.
There was an
Right.
opportunity.
Sorry,
Go
James,
ahead.
just proceed. I just wanted to say something really small. The thing is, FOMO is the worst driving force when it comes to crypto. And the UK FCA keeps warning the consumer about FOMO, because people are just going in one direction in a rush without understanding even what the white papers are offering. There's some really good projects out there. So you have to see what the white paper is talking about, and the legal repercussions as well, because the legal repercussions are really blurry at this stage as well. So what happens when you don't even understand the legality that the white papers are talking about? Some of them don't even have legal points in them. And in some of these projects, you're even investing in ideas. You're not even investing in a wholesome project. So what's the project offering? What's the community around it? What's the supply? What's the law of returns? There's so many things. So I would say in summation, people should look at crypto just like how they look at everyday trading and everyday finance, because it is finance. So just the same way you won't throw around your pounds and your dollars left, right, and center, is the same way you just don't throw around, because these are your investments, and there are people who really lose out like on their lifetime earnings as well. So for me, I'll just emphasize and reiterate that we really need to get properly educated and emphasize on consumer awareness.
Cool.
Yeah, towards what Ben was saying, even during the bear market, if you look at the actual price data from 2018 to 2020, you can see in there that there was actually like months and months and months and months you could have bought at the 6K level. Like hitting that target off the 6K price level is not like where a lot of people look at the market. Like so many people during the market, they measured down from that peak, the December peak of that, was there for 2 minutes. Likelihood of you buying that or selling that, it's pretty unlikely. But I mean, if you look at the price, we were there for 6K for months and months. And even during the middle of the bear market, before we went back down to 3K, like 3.5K in March 2020, we actually hit basically 12K. So literally your Bitcoin could have been purchased over months at 6K, doubled, you could have taken profit, like Ben said, and then you could have carried on the rest of the market, found out later that you had other buying opportunities. So I think it's not all bad, but I think that a lot of the time what ends up happening is, again, this distraction into some of these more exotic coins that just kind of burn into nothing in the middle of the bear market, where they don't have the fundamentals. No fundamentals is okay. During a bull market, things still survive. In the bear market, they really go to nothing. The guy who owns 90% of the supply sells all his coins month over month until until the market's completely gone.
So is this what you're just saying, James? Are you like you're a big Bitcoin guy, but you don't like these meme coins like Dogecoin? You think that's their dust? What I mean, I know a lot of folks on BigONE Exchange, like the pet coins, the Dogecoins, but maybe you think they're not going to survive 2022. What's your thoughts?
No, so as far as meme coins, I think there's arguments to be made about the large communities built around those coins, and the amount of marketing volume that they have, and whether or not they have marketing potential. So I wouldn't discount them. Am I looking at them like an investment opportunity? That's a whole different discussion, right? But I think the reality is that it's not about yes or no, this project will be correct. It's that the further you go down the list, you end up getting like odds, like 1 in 100 will be successful. And we start being gamblers, not people that are investing in poor risk management. One of the things that I really learned during the bear market was like watching my portfolio drop 80%, then go like 12x, then drop 80% and realize, oh, okay, this is how I do risk management of these things. This is how, I avoid that. This is how I balance this, and able to deploy strategies during this market. So when I watch price go down, I'm like, oh, cool. Like, here's another opportunity for me.
Yeah, I think on the subject of like meme coins, I think everybody's probably got to say something, so I'll keep it short. But I think like Doge, like I had Doge back in the day, and it was a kind of joke, I actually had a load of Doge on a hard drive. Classic story. I'm not even joking. This is true. I couldn't get it off my hard drive when it pumped up. I was like, do you know what? It's gone. Like live with it. I think when you get like a fork or like from Doge to Shiba, I think that's the sort of biggest opportunity, because that's where the first amount of people go with the biggest network effect, which is what James is talking about. Those communities are tribal and they will never sell, they'll die on a hill before they sell. But the next one, less network effect. And as they clone, there's less and less network effect and less trust in it. And I think keep an eye on that. So, if there's a project that's doing really well, good fundamentals, and they fork it off, like the vegetable sushi swap, right? As soon as you start copying, that brand effect goes down. We saw it with Bitcoin, that name stayed true. There was, Bitcoin Cash and Bitcoin SV. And every time that brand is reused, you lose that brand equity because it's, it hasn't come from a true place. And so, that's what I kind of think about meme coins. I don't personally go in for much meme coins, but I can see how you could trade them on a shorter time frame. Not really my bag. I'm more about more of a long-term play, but there are opportunities there, but just be super careful.
I would say, given I'm probably the oldest here, so I do remember a few things. I mean, I'm always analogizing between the traditional market, crypto market, and we have to remember penny shares. And people used to trade penny shares, and these were companies that were literally worth a couple of pennies. And I see some of these meme coins like that. These are the penny shares of the crypto market, and I don't see any harm in playing part of your portfolio with some penny shares. You always have your premium stuff, your blue chip, but I think it's fun to look at some of these coins. And like people have mentioned, Brian's mentioned about regulation. Just look at just look at the quality of what they're putting out there. But some of these meme coins might actually make a bit of money for you. And I don't see anything wrong with playing with the equivalent of penny shares, which I used to do many years ago, and play with some meme coins. But obviously, no more than 10% of your portfolio. Call that your alternative altcoin kind of basket of coins. I think it could be fun.
I think the meme coins are just like a bet. When you go to the roulette and you bet on the black or the red, the meme coins are the green shot in the roulette. So I think that a small part, I usually allocate a very small part of my portfolio into meme coins, just because I am aware that it's just a bet on something that is very unlikely to bring me some money. But I know that seeing the returns that Shiba has done, Doge has done, and I think that even if on 100 of different altcoin, I cannot call them altcoin, they are just a meme coin. And if one on 100 of meme coin goes for the right way, I can just go to the break even and maybe onwards. So I think that if I guess correctly, 2 shots on 100, I can make some money. And then with that, I can get and grab a beer, for example.
Well, I guess you haven't really answered though my original question, right? Which was, what's the cheats, the shortcuts to making money in 2022? You don't keep your cards close to your chest, gentlemen. Where do you think the opportunities lie? Give our viewers, our listeners, some sneaks, some secrets that you're willing to share. What do you reckon?
Yeah, so I think there's going to be some super interesting movement continuing on from the NFT space. There were a lot of good projects there. There's so much value in art and culture. It's really been sitting on the back burner, and it's now time to shine there. So NFTs, there's going to be huge growth there. The metaverse, obviously. The thing about the metaverse, though, is that to create like 3D worlds, that's like really expensive. So the projects that don't have funding or don't have money, they can't just like spin up a metaverse, because you need production, you need 3D artists. So it's the bigger players that are going to be doing that stuff. They've got money, they've got backing behind it. So, and with the metaverse, you need to keep people in those communities and keep them there and give them things to do. So any metaverse that we're incorporating gaming, DeFi gaming, play to earn, esports, stuff like that, I think it's going to be massive. Keep an eye on the DAOs. Investment DAOs are going to be massive in 2022. Digital fashion and tailoring, uncapped market. But I think probably my hot tip is the music industry. I think the music industry is going to take the power away from the big record labels 2022, and you're going to see a lot of growth in that space as well. So that's my top tip, Stuart. So you have to squeeze it out of me. There you go.
Hey, thanks, Ben. Always good to squeeze a good one out.
I think consumers should take advantage of the current bear market, because when the markets are low, it's the best time to invest. You invest during a crisis and wait for the bull markets to come, and then you make your money. I agree with Ben. NFTs in terms of art, music, everything, but NFTs are going to evolve into something better. It just won't be about art and music. It's going to have more public sector usage as well. And this is what I, as a lawyer, I'm waiting for the public sector use of NFTs. I think blockchain as a whole this year is going to go further, because projects like Polkadot and them, they're looking very nice. You're looking at interoperability and scaling. Those are the cell factors that we're looking at. So nice things are going to happen this year. So let's just be positive. But I know regulation is also going to come hard on people, because like in England right now, you have the law commission talking about smart contracts. You have the law commission talking about NFTs. You have the law commission talking about the use of blockchain in some public sectors. So there's many things coming up. So it's an exciting year for everybody. So hooray for everybody.
Thanks, Brian.
Yeah.
Yeah, sure.
If I was going to give a tip, I would just go very specifically to digital real estate. I think that's got somewhere to go. It's quite cheap at the moment. If real estate's always done well, why shouldn't it do well in the digital world? So, and I'll just echo Ben. If you're a gamer, and got to bone up on NFTs, because there's lots of money to be earned going forward with gamers. You can become a top gamer. You can earn coins off being a top gamer, and your skin, your avatar, can actually be sold on the NFT market for a lot of money. If you're a really good gamer and you're out on a game and you're winning a lot of whatever it is you're into, battles, you will generate income from coins that you earn from the platform you're on, and you can actually then NFT that and sell it to someone else, and then start another NFT, start another avatar, and start all over again. So someone who's a gamer, good gamer, look at NFTs and gaming platforms, and someone who isn't a gamer, you might want to get into that space.
Okay.
My shot for this year are into the metaverse and into the NFTs. There are different metaverses and business models into metaverses that are coming up. And I'm not just referring to the Decentraland, NFT World, Sandbox. I bought some lands from a new metaverse that is going to be launched in the next weeks. And I think that owning some lands into the metaverse one day will allow us to rent it, for example, and to create for us a passive income, not just based on the token that this land may create, but lending, for example, for some exhibitions, for some games, or for others that we are going to build onto our land. So if we are not old enough to have gathered some lands, real lands, earth lands, in the beginning of the 19th century, I think that 19th or 20th century, I think that investing something into the metaverse for this kind of purpose, not just a markup of the price of the land, but for renting and for other business purposes, is a great shot. Another thing that I would like to add is that, as correctly Brian said before, Bitcoin and Ethereum are going to be a great shot in the next period, not just for the merit, for the good things that are coming connected to Bitcoin and Ethereum, but for the worst thing connected to the dollar and to other fiat currencies that are currently under an inflation that is kind of impressive. It's a massive inflation, and they're just not telling us what is the real inflation. We are now paying into our bills and now in other utilities and facilities that we are using right now. So I think that accumulating some inflation controlled currencies, so Bitcoin and Ethereum, are a very good shot for this year.
And sorry, Stuart, could I just say one last thing before you go to James? Crowdfunding as well. Crowdfunding this year is going to be remarkable, and digital crowdfunding with sort of DAO crowdfunding. This is next level kind of stuff. So I'm really excited, and I'm really watching it keenly. Yeah, that's it from me. Yeah.
Yeah, James.
Yeah, for me, in the DeFi space, I'm looking for applications that are doing something where I could go to the GitHub repo and see that like they didn't just fork someone else's code and literally do the same thing. I'd also like to see front-end interfaces, like businesses that build themselves more like aggregators that are running off existing pools of money. So for example, like they could use the back end of Uniswap on the actual Ethereum chain, and then they build a different UI that's more user-friendly. This is something that's possible. This is something that's really hard for people to understand about Web3, is that because it is on the blockchain, we can build all these unique user interfaces because it's not in someone's centralized database. I think that that's going to become common knowledge and really built upon in the next year or two, and then unique new things. And then the NFT space is super interesting to me. I actually purchased land in 2020, back when it was crazy to do so. And I have NFTs from initial metaverse concepts from 2018, as well as I was a competitive gamer for over 10 years. So I look at that space from both the perspective of these gamers who are afraid that this will become a pay-to-win metric, as well as understanding, this global metric of where all these gamers coming from in international markets, how much money are they exposed to. Some of these people only make like $10 a day. This income can be doubled inside of this market easily. And these actually, I think it'll become common, and it's something I'm personally looking at, being able to hire these people to actually work for you in the digital market inside of these metaverses, collecting items so that you can resell it. It actually becomes gainful employment for them. And then at the same time, I think one of the things really not thought about much is when a game has a map, okay, and let's say it has 100,000 land plots. When I pull up the map, I can see all these land plots. If on my land that I own, I actually put my business logo, and this game now has 3 million users, this is the equivalent of a website with 3 million users of web traffic who are now looking at my logo. So this is kind of the, exciting crypto side of it. I think the real gamer side of it is realizing in games just how many of these games fail. I think we're in a place right now where there's a lot of hype, a lot of speculation, and I'd like to see more gamers and more gamers interested rather than turned off by it, and see less dump trucks of money trying to back up into games that like I actually sit down and try to play, and I'm like, this is horrible. Like, this is not fun at all to play this. The only reason people are here is because they can earn an X token if they smash button 82 times, bored out of their mind. This is not a long-term game model. This is just some unfortunate experience that people are doing as a way to make income.
Fair enough. Fair enough. Well, that's great. Thank you, everyone. I think we're coming to the end of our discussion about the current market and how to keep cool and still make money in 2022. But you may still have, something you want to get off your chest. Why don't we try just, what's your one line, your mantra, your slogan for the year, that, your good luck charm, whatever you want to call it. Just give me that line, that's keeping you happy, keeping you focused. Ben, do you want to, let's have yours.
Get off Blockfolio. Realize that there's a world out there, and that it's not all about numbers on an app. Just remember that we're in a real world. People that are in the crypto space tend to kind of get very kind of insular and focused on, there's other things out there. Look at projects, get involved with projects, get involved with communities, speak to real people.
Next. Mikael, you want to mute?
Yeah, my last motive for this year will be do, done, next. So it'll be like a full succession of projects. Some of them are already carrying on. Other ones will be carrying on in the next month. So do, done, next.
Yeah, I would say just keep educating yourself, keep talking to people, keep building your own professional community and your social community as well. And follow potential projects. You don't have to be on the huge projects. You can start small and grow. Just grow according to what you're comfortable, and don't let the former drive you. Just be you. Be honest. Be real to yourself. That's it.
I mean, I would just simply say, if you want tomorrow to be good, make sure you enjoy today.
Right. Great. And James, you're
Yeah, I think that for me, I'm looking at the learning opportunities when the market's calm. There's less noise, and I find the dialogue is substantially better. We spend a lot less time talking about price, and we spend a lot more time talking about technology, what we can build, what we can do, what's the new thing to learn in the space. And it feels much more calm and really able to dig into the technology. And for me, what that had afforded me from 2017 was being able to enter this space now as we had this rise in 2020, actually understanding how these protocols work. And I think that's a huge advantage. So whenever you get that calm opportunity, I'd say take it.
right. Well, that's great. Thanks first and foremost to Ben from the Cape for helping organize this. Thanks to Mikhail, David, Brian, and James, of course, as well. And I hope we get some good feedback, and thanks again.